Do you use your car for business? Perhaps you travel for your job, or maybe you're self-employed and you go from person to person that you're helping by using your auto. Well, it's very important to know what you're able to deduct according to the IRS rules. There are basically two ways you can deduct auto expenses. One is by doing the actual expense for running the car, and one is by doing the standard mileage rate. So I have a lot of people that say, well, why don't my business just own my car? And actually, most of the time, the most common way to treat your car is to do the standard mileage rate. That is because it's one of the simplest ways to do it. And if you use the actual, then your business must buy your car and depreciate the car, and it's a lot more record keeping. So the actual mileage would then be keeping track of your fuel expense, your insurance, the repairs and maintenance, and the cost of the car would be depreciated. The standard mileage rate, the standard mileage rate is set by the IRS annually, and currently it's 0.555 for 2012. That would be per mile. So you can understand that if you go several miles a day, that every 2 miles you go, it's $1 that's a deduction on your tax return. And it is important that you keep track of the beginning mileage, the ending mileage, and also note the purpose for your trip. That would be on some kind of record. You could either have a log or you can keep it on a program in your computer. There's lots of apps right now that you can put on your iPhone that will make it easy for you to keep track of your expenses. So whatever way you do, remember that it's very important to be able to have a backup or a log of what your expenses are when you do your tax return at the end of the year.